Hello, I'm Monica Gibson, and today I'm joined down the line by Patrik Lang, Head of Equity Research with Julius Baer, for an update on the luxury goods market. So Patrik, today marks Mega Monday in the UK following a record-breaking Black Friday in the US as Christmas shoppers get serious. But are you expecting the luxury goods market to benefit?
I mean, in general, Christmas season is a very important period for consumption in general, but also for the luxury goods sector. I think that at the beginning of the Christmas shopping season, Black Friday in the US or now Mega Monday in the UK, shoppers are more focused on discounts, which is not exactly what the luxury sectors is offering. So initially, I would not expect the luxury sector to benefit particularly.
Some analysts have said that an influx of cheap clothes from China has hurt Italy's economy, for example, as consumers are offered alternative to high-end clothing and accessories. Do you believe this to be the case?
Not really, to be honest. I think that apparel imports from China are not really competing with European-made or Italian-made luxury products. Those apparel products are more competing with the likes of H&M or Primark from the UK, but not with the luxury sector.
That being said, luxury executives said Italy needs a continuation of credible leadership after years of mismanagement and corruption, and therefore the luxury good industry needs Monti to stay on. Do you agree with this?
I think luxury is typically an export-driven industry from a European or from an Italian or even Swiss perspective, and therefore is less affected by political instability or mismanagement within some nations in Europe. And therefore I would not perceive that as a problem which affects the Italian luxury industry particularly.
The fiscal cliff is still looming over the US. Experts have said they expect the global goods market to grow overall 10% in 2012. But how will the luxury goods market be affected by taxes on the wealthy, potentially rising as a result of the federal budget deal?
I think a federal budget deal and the solution to this fiscal cliff issue is very important with regard to the overall economy, to the overall consumer environment, and therefore also for the luxury space. But I actually don't believe that tax increases will have a negative impact on luxury consumption in the US, as in general wealthy consumers are not particularly dependent or do not depend on tax relief, so that there is not a strong correlation from my point of view between the tax burden and luxury consumption. So therefore I believe, to cut it short, the solution to the fiscal cliff is important, but I'm not particularly worried on the tax situation in the US.
In 2013, some say the question for China remains what kind of growth leading luxury groups like LVMH and Richemont can realistically expect. But what are you predicting for the next few quarters for this industry?
I mean, with regard to the luxury industry in China for end demand, we have seen a stabilization. We are now slightly down year over year. I mean, we have been down quite heavily in earlier over the summer months, but the situation now seems to stabilize. I think it will continue over the coming months to stabilize, and we will probably move into positive territory within the next 2 to 3 months, and that's also what I expect for next year. So quite healthy growth rates, maybe close to high single-digit or even double-digit rates.
Patrik, thank you very much for your insights today. Well, that's all we have time for at the moment, but for more empirical analysis and exclusive interviews, please do click back to Dukascopy TV. Bye for now.